It sure is. Yep.
All right, perfect. Well, yeah, Melissa, thanks for coordinating everything, getting us on here. We really appreciate it. But yeah, my name is Seth. I'm the marketing coordinator with Reminder Media. We've been around for 20 years now. We're based out of Philly, and I'll keep things pretty brief. Really, what we're going to go over is, we know that keeping up with your past clients and spheres of influence could be like a full-time job. We can take some of the burden off of your shoulders. And again, whether you're a brand new agent, part time, seasoned vet, or anywhere in between, driving the referrals, getting the client retention, it's the name of the game in real estate. And I'm not going to spend too much time on the statistics. It's nothing that you guys don't already know, but these do help to put things into perspective. So NAR found that 60% of buyers and 67% of sellers are finding their agent through a referral or use the last agent that they worked with. Now, taking a closer look at the sellers, we know that everyone wants to be the good listing agent. Again, 67% of these sellers are finding their agent through a referral. And you'll notice up at the top, NAR found that only around 5% were finding their agents through websites and more traditional farming tools combined. So, yes, everyone is browsing for homes online, but it's not necessarily where they're finding their agent, which makes this one peculiar. So, this is where NAR found agents spending their budget. And I don't need to tell any of you, there are a lot of unavoidable expenses that come along with real estate. But if you look down at the bottom, NAR found that on average, the majority of agents spend $0 per year on the referral-based and relationship expenses. So this kind of shows us that a lot of agents are putting their time, their effort, but most importantly, the money, maybe not in the right place. And ultimately, this is why we're here. The last thing anyone in real estate wants to see, you're driving home from a long day, you go past one of your favorite clients' homes, or even worse, the friend or family member, and there's the for sale sign that popped up with a different agent's name on it. I know this is when everyone's always kicking themselves, so these are the missed opportunities that we're looking to prevent. And I'm sure everyone can agree, real estate's a relationship business, and I know human nature tends to hover towards what we see the most. So that being said, the easiest way to generate more referrals and secure the repeat transactions is by reminding your clients that you value the relationship and really just showing them that you appreciate any business that they have sent your way in the past. And that's exactly what we do. We help agents stay connected with the spheres of influence and the past clients in order to help generate the referral opportunities and secure those future transactions. So we now have 4 different magazines to do that with. So starting in the back, we do now have one for the commercial agents. It's called Business in Action Magazine. So that one, all the articles inside are business related, business trends. In front of that, we have the Start Healthy magazine. So this one has a healthier spin to it. Overall health and wellness, healthier recipes in there. The American Lifestyle magazine, that one's been around for 20 years. It's kind of the jack of all trades. So it's going to have travel, health, recipes, home decoration, pretty similar to an Architectural Digest. And then front and center, we have the Good to Be Home magazine. And this one's actually been the crowd favorite. So since we're doing this remotely, I wanted to pull it up so you guys can get a feel for it. So the Good to Be Home magazine, it's all home content, home upkeep, home decorating, still has some recipes in there. And now the nice thing about us having the 4 different magazines, you will have access to all 4. So you can use Good to Be Home for 15 of your contacts, maybe 20 would like to Start Healthy, the others would like the American Lifestyle. You can mix and match. So you'll have access to all of them or switch from mailing to mailing. Some agents will like to switch up the magazine they're using. So you do have the variety, you have the options now with all 4. And then one thing that I always like to point out, there are no advertisements in these magazines. I know sometimes you go through a magazine and every single page has an ad on it. There are no ads in here. It's pure content. And it's also not filled with a ton of real estate. And that's really why it works so well. It's not coming off as like a typical piece of marketing. It's going to be seen more as a gift and item of value. But getting back to it, each of the magazines, they're 48 pages, 8 articles per issue, and it's fully customized to the agent as well as the recipient that we mail it to. So taking a close look at the customization, this is the front cover of the magazine. So the first thing that your contacts see when they pull out of the mailbox is your photo, your logo, your contact information. So they know exactly who it's coming from, no questions there. And then in terms of the imagery of the front cover, we have tons of different options to choose from. So these are the Good to Be Home covers coming into the spring edition. So we have some that are more like seasonal, related to spring, some that are more standard neutral. So tons of different options to choose from those front covers. And then when they flip to the inside of the front cover, there's a letter to the recipient. And right at the top, it will automatically say the contact's name. So Dear Bill and Judy, rather than a generic Dear Valued Resident. And then with the letter itself, we always have a letter that we've written for you as a starting point. And most agents use our letter. It's not too cheesy or cookie cutter feeling, but you can edit that letter. You can write your own letter entirely, and you can even customize it to the individual. So if Bill and Judy just had a baby or bought a home with you, you can actually wish them a congratulations in their personal magazine. We also have two branded tear out cards. There's one card that's in the front of the magazine, one in the back. And these are like recipe cards, do it yourself tips around the home. We've about 600 options to choose from. And these are great because, again, they have your photo, they have your contact info on them. So someone can give that to their friend that's thinking about moving, or maybe they just keep it for themselves for the recipe. It's just one more way that we keep you in the home longer, extend the reach in the community. And then you'll also have the full back cover and the full inside of the back cover. And these can be blank canvases. So if there's anything else about yourself that you wanted to include, client testimonials, maybe you're going to have an event coming up, you could do your previously sold properties, co-brand with a lender or a title company. You could put a picture of your dog back there. So anything that you'd like for the back cover and the inside of the back cover, we can do for you. And then obviously it's a presentation on marketing. So I always like to highlight some things that we do see a lot in the business. The one end of the spectrum, you have the dinners, the bottles of wine, the gift cards, and these are all great gestures. Your clients will love them. They make great closing gifts. But if we are trying to take every one of our clients on a quarterly dinner, just in hopes of earning the business back in 5 years, we'll all go broke along the process. And the other end of the spectrum, we have the newsletters, the flyers, the emails. And again, these things all do serve a purpose, but I know they tend to find the trash can pretty quickly. And that's really one of the biggest obstacles. So the number one reason that agents use our services is because of our long shelf life. So we average a 4-week shelf life in the home of the recipient. And again, that all stems back to the quality of the piece, the fact that it's seen as a gift, an item of value. So this makes it past the trash can, it hits the coffee table, the nightstand next to the bed, and it stays there. So you basically have that mini billboard sitting in their living room for the next month. So I do want to pause for questions here. And I know two questions that we always get. First, of course, is the cost. And we do have a great office promotion for you guys. I'll get to in just a second here. And the other question that we get a lot is how often the magazines get mailed out. So with that 4-week shelf life that we average, we have new magazines available every 2 months, 6 times a year total. So every 2 months, we'll have new publications available. But I want to see what kind of questions you guys have on the magazines, the customization, who it's going out to. And I know we do work with an agent or two here. So if there are any current clients that want to share their own thoughts, feel free. But what questions did you guys have overall?
You apparently did a good job explaining it because I know in here there wasn't any questions. I don't see any popping up on the chat either.
Sure. Well, then I can keep moving and get to the good stuff.
Okay.
Oh, and actually, before I get to the pricing, this is new, and I wanted to mention it. We've been getting great feedback on it. So now when you send over a contact list from your database, we go through and look at the household income, how much equity they have in their homes, and even the behavioral data of what websites and apps they're using. So are they on Zillow looking at homes every day? We give you a report that shows you your contacts that are most likely to be moving, and it's been 72% accurate on picking people moving the next 6 months to a year. So it's almost a little creepy, but it's really taken a lot of the guesswork out of it, shows you which of the contacts to keep a close eye on. So this is now included with the magazine. But getting to the good stuff, if you have the pen and paper handy, this is the good slide. So there's 3 promotions that we're going to tie together for the next week here for the office. So first of which is the activation fee. So typically getting set up with us, it's $300. We're going to drop it down to just $99. So it is a one-time $99 setup fee. And this gets you in line with one of our marketing advisors. So the marketing advisor is a real person, not a robot, and they walk you through the entire process. So they'll talk to you about strategies, tips and tricks with how to use this. And then maybe equally as important, we know you're busy, think of them like your personal assistant. So really what we would need from you over the next couple of weeks here is send over your photo, send over the list of the contacts that you want us to mail it to, and they take care of the rest. So they put the magazine together, they mail it out for you. It's very easy, very turnkey for the busy agents. The second incentive moving to the right is the cost of the magazines. So usually the magazines are priced off of a sliding scale. So the more you buy, lower the cost. We're just going to give everyone the bulk rate. So it's just $4.49 per magazine. And that covers the back end. So the shipping and handling, the customization. So for about half the price of a Hallmark card, you get a fully custom magazine, and we do mail it right to the contact's homes. So and everyone's favorite part is we do cover the postage. And then the minimum order is just 50 magazines. So you can start pretty small with it. Again, most agents are targeting their favorite clients, their A-list sphere. So really that top tier of the database. So the 50 times the $4.49 comes out to be $224. The nice thing is you don't pay for them today. You pay for the magazines when you want them being mailed out, and you get to pick your own deadline. So we have mailing options every single week. Most people that are starting to work with us right now have the first one being delivered anywhere between the end of February all the way through the beginning of May. And there's mailing options every single week in between. So you tell us the week you want it going out. That's when you pay for the magazines. And the last thing down at the bottom, we are going to do no contract for you guys. So we'd love to earn your business for the long term, of course. And the best way to do it is to prove that this works, get you some referrals. And we know if we can help contribute to a commission check or two, I'm sure you'll gladly keep us around for some future mailings. I know for myself, I always kind of like to finish up by taking a small step back from the magazines. As funny as it sounds, it's not entirely about the magazines, but this is a bi-monthly reason to call some of your clients and contacts. And we know that sometimes making those calls isn't the easiest thing to do, but this really breaks down the client to agent wall, makes it more of a friend to friend conversation. See what they thought of the magazine this month, see if they tried the recipe on page 12. And then from there, you could do what you do best and sprinkle the real estate in. See if they do have any friends or family that might be looking to move coming into the spring and the summer. And the agents that make those follow-up calls, they get the great feedback on the magazine. Everyone loves seeing on the cover. But more importantly, that's when you start to uncover the referrals. That's when you get to see it grow your business firsthand. So really that wraps it up on my end. And I did want to land on this giant QR code to finish up. So they started letting us do a little day of the presentation doorbuster sale. So if anyone is thinking this sounds like a nice idea to try out coming into the springtime, anyone that signs up today, if you scan this QR code, you get a 15 free magazine credit towards your first mailing. So anyone that signs up today, if you scan this QR code, it's a 15 free magazine credit, and that knocks off an extra $67. So instead of being the $224, the first order will be just under $157. So I know we always have pricing questions. What questions did you guys have there?
Any pressing questions? I know we do have a couple agents who have done it, like they've left them at businesses they frequent and send them to clients. I don't know how much they help or don't help.
Yeah, a lot of agents will also get like a little bundle that come right to themselves. So again, some people like to get them for their doctor's office, their hair salons, and then even
Yes.
some agents like to bring it to a listing presentation, or if you're doing an open house, almost like an elevated business card there as well. So you can also get some that would just come right to you.
Yeah, I've seen them. We had one of the agents brought a few in here also a few months ago. Just she gave them to the attorney and stuff like that as well.
Mm-hmm.
No, I know in the office nobody has any questions. I don't
Any
see
online
anything.
before I turn things back over to Melissa? All right.
I don't see
Well,
any
I will
chats
go
popping up.
ahead
So
and pass things back to you, Melissa, and I'll send you an email kind of recapping everything. So
okay,
if anyone does have any questions, feel free to call, text, email anytime, and I'll throw my info in the chat box here as well before I pop off.
okay. When I get that, I'll forward it out to all the agents.
Perfect. Well, again, I really appreciate it, and I will put my info in the chat box here.
Okay, perfect. Thank you.
Yep, absolutely. Talk to you soon.
And we're going to get everything switched over to Terry. So if y'all give me just 1 second, please.
All right, is that better now? See, I have to learn stuff. I was going to show you guys something I learned last week at 53. Most of you guys are probably old enough to remember the movie Big Daddy with Adam Sandler and Julian and his sunglasses because he was afraid to be seen. So the other day I was on here and gave myself a pair of glasses.
That is cool.
And it eliminates all of my fear of being in front of you guys.
There you go.
So I can be on Zoom calls now and have my face seen because I got my shades on.
Okay.
So let me start out. I want to show you guys a couple of things. Have y'all noticed it's slower for like maybe 2 weeks? I've had a lot of agents call me in the last 2 weeks and say, am I slow? And I can tell you it's a little bit slower now than it was 2, 3, 4 weeks ago. And this is probably the biggest reason why. So this chart shows mortgage-backed security prices going back from August. So if you see the far left is August prices. We want to see green in this, okay? Red is bad. Red means the prices are going down, which means the rates are going up. They work inversely of each other, okay? So when mortgage-backed security prices are coming down, the rates are going up. So this trend line here, we see all the red coming down. This was through the summer when rates went to 7, 7.5, 8% and over, okay? You notice about probably, October the 26th, we started getting better and we went on a run for a long period of time. You know, a lot of green in here when the prices, if the prices are going up, then the rates are going down. And I have to always stop and correct myself with that because it's hard to remember it that way. But mortgage-backed securities, if the price is going up, if the trend line's going up, then our rates are coming down, okay? So you can see we've had a run up where rates have gotten better until about what day here? December 28th, so 20 plus days ago. And you can see we've kind of backed off a little bit, all right?
We need to see if they can see your screen because
Oh, yeah, y'all can't see it, can you? Because I didn't share the screen. Oh, dang it. Here, let's pull this up. All right, can you guys on Zoom see that? To go back over what we just did, so like this was from the end of July, 23, and you can see the trend line was mortgage-backed securities prices getting worse, which means that rates were going up. So during this whole time from July until October, you can see we got worse a lot. Mortgage-backed securities got worse. That means rates got worse. And then we hit this October 26th date, and you can see we had a lot of positive movement with rates. The price is going up here, which means the rates are coming down until we hit, about right in here, December 28th. And we've had about a 2-3 week period where kind of gotten a little bit worse. We locked stuff 3 weeks ago. I locked a 5.75 about 3 weeks ago. So we've had lower. We've been locking 6 1/4, 6 1/8. But over the last 2 weeks, when people call, they kept hearing the media saying, hey, rates are getting better, rates are getting better. And then all of a sudden they call and we're giving them worse rates. So they don't like to hear it, but I think that's what we're going to experience until we get a little bit further into the year. If you go back last year when the Fed would talk, the Fed would say, over and over and over, we're going to keep the rate higher longer. That was their verbiage, higher longer, which meant they weren't going to cut anything until probably November, December. Now they're already talking about a cut in March. And it's gone from like a 60 to an 85% chance of a cut. That's pretty strong likelihood of a cut in March when we weren't going to see cuts until the end of the year. After that, they're saying there's going to be probably 4 to 6 more cuts throughout the course of the year. Well, if you think March is the 3rd month, you only got 9 months left. If there's 6 more cuts to follow, rates are going to come down pretty quick. Now, I'm quick to point out to people, we're not going to see 2s and 3s again. Okay, I'm 53. That's the only time in my lifetime I've seen rates that low. That's not going to happen. But you have to remember the government was buying mortgage-backed securities from 2008 till 2022. So that piece of keeping rates lower is not in the mix anymore. They're not doing that. I don't think we see fours. If we do, it's going to be upper fours. But I think if we can land in the fives and the sixes, we'll be okay. If you go back and look historically, fives and sixes are good rates. You have to look at everything that's going on in the market with the mortgage rates. And look, there's positive stuff happening. For example, bank CDs. You know, for the last 15 years, have you seen any CDs paying more than 1%? You haven't. You know, right now there's banks that are paying 3, 4, 5, 6, 7% on CDs. So yes, you're paying a little bit more on your mortgage, but you can take your savings and make a little bit more this way. And the other piece that nobody thinks about, and if you're 35 and under, nobody has really written off mortgage interest for the past 10, 12, 15 years because rates have been too low. The standard deduction doubled. So there's not a lot of deductions going on with that. But you think about it, if you took a $400,000 mortgage in 23 at 6%, you're talking $24,000 in interest over the year. If the standard deduction for a married couple is $27,000, you've already got 24 that came from your mortgage. You're probably going to itemize. You're probably going to, you know, hopefully get money back from Uncle Sam. I've never personally been mad writing a mortgage check to pay my mortgage. I have been infuriated when I have to write an extra check to pay more on my taxes when I come back from a CPA. So I'll pay a little bit more interest and write it off and hopefully get it back later and I'll be fine. And that's what we need to be talking to people about, because you got a lot of people in the market that don't realize you can do that because they've never had an opportunity to do it. So those are things to talk about. You know, when somebody says, well, I'm just gonna wait till the rate's gonna hit 3% again, you're gonna wait a long, long time. Okay. What I wanted to kind of go over with you guys, every time rates go up, this comes back into play. My message to my buyers right now is we are in a transition phase. We're transitioning from higher rates to lower rates. We're not at the lower rates yet. We hope we're going to get there. We think we're going to get there. But because of the transition, you got to look at stuff like the buy down. Because like right now, if I priced somebody out right now, we'd probably be close to 7, maybe even over 7 if we don't pay points. I don't like paying points right now. Okay. If you pay points on your mortgage to buy the rate down, your break even is about 36 months. Well, we already expect everybody that's bought in the last 2 years and then this year will probably refinance in the next 6 to 12 months. So why put them in a situation where they're paying extra money at closing that's pushing out their break even further out than they're even going to have the loan? So these are conversations that I'm having with buyers because everybody wants the best rate. You know, everybody wants the lowest payment. Now is not the time really for that yet. Okay. But what the buy down does is it helps them because it does give them a better payment for the short term. And I like the fact that the subsidy money they get to use, you know, when they go to refinance, if they do that in the next year or two, that subsidy money rolls over and pays down the balance on the loan. So I wanted to kind of go over a couple of things real quick with this. I can't get to my screen here. Can't get to the button for the slideshow.
So what you have to do?
I think it should do it now.
Well, it's.
I gotta share it again.
Your pause, but you might have to
All right.
reshare that screen
Reshare it.
because you bounce between
Yep.
programs.
1 second. Resume share. Nope. New share. Did that do it? Wow, we're not on the slideshow for some reason there. All right, I'm just gonna go roll this one. I can't get to where I can start the slideshow. Oh, wait, here we go. I think we got it right here. Is that it?
I see the blank. I see the blank one.
Oh, let me share it again here. Now we should be good. Better?
Yeah, we're good.
All right, let's resume this. Now, it won't let me do the slideshow for some reason, but we will just roll over here.
You have to do it individually.
That's what I'm gonna do. Trying to get my cursor over to it.
You think if you put sunglasses on your face,
I
you
could,
can handle that.
it's because I'm 53. I need to get my son to teach me how to use it. 53 is old. For me. You can see me walking around. All right, let's see. Yeah, I got to learn more about Zoom and stuff. I can't even get to I can't get the cursor over to the slide. Maybe, but I don't know if it'll work. I can see the cursor right here. Can you see it? Like I can see it coming up here, but I can't get it over to the slides. It won't go over there. Drive me crazy. Let me see if I can make it smaller. And then pull it that way. It does not like this screen for some reason. We got it finally. Woo! All right, so here is what you need to know. Can you see it still?
Yep.
Sweet. All right, so what's a temporary buy down? Temporary buy down is basically you're making an interest payment up front, okay? What people need to understand on the buy down is you're making the full payment. So if we go in and we say the rate is 7% for the loan, but your first year, the rate's going to be 2 points better on a 2-1 buy down. So the rate the first year for the client would be 5%. We're still making the payment at 7%, but the difference in that payment is coming from the seller when they give you the closing costs to set up the buy down. Okay. So it's not that we're missing a portion of the payment. The whole payment's being made. The seller's making a portion of it for you. They're basically paying it up front by putting it in that subsidy. So there are a couple of different types. So I'm going to show you in just a second how to do the predetermined amount, because I have a calculator I can send you that'll show you exactly how much you need to have in closing costs to make the buy down work, whether it's a 1-0, a 2-1, or a 3-2-1. And then basically what happens is the money sits in an escrow account, and that money starts to pull out when they start making payments. So the first payment, whatever that amount is, will come out to the first payment, then the second and the third, and so on. Again, what I like about it is as money's coming out of that subsidy account, if they go to refinance, short term this year, 6, 7, 8 months, then that money is going to go towards the balance. So one thing that I think about a lot with people in the market right now is everybody worries about overpaying for a house. And we don't. I don't think prices are going to decline. People ask me that every day. I don't see prices declining. I do see some that are sitting on the market longer that maybe have been listed a little bit too high, and there's prices that are dropping because of that. But if your fear is I'm overpaying for the house, if you refinance with this program and you have that subsidy money, then that money's rolling to pay down the balance of the loan when you refinance. So to me, it kind of offsets the fear of overpaying for the house too, while you're getting the better rate, better payment. So this is the different loans that you can do the buy down on. You can do it on every loan type out there: conventional, FHA, VA, USDA, jumbo. There's a 1.0, which is 1 point better rate the first year. Then it rolls to the regular rate. 2.1, which is 2 points better the first year, 1 point better the second year. And then it rolls to the regular rate. And then a 3.2.1. And that's the same. 3 years, 3 points better the first year, then 2 points, then 1, and then it rolls to the regular rate. The way that I would look at any of these, I don't look at any of these as a long-term loan. I don't feel like any of these loans will carry more than a year because I feel like people will do this to get a better payment and to set themselves up to refinance. So you can do it with all programs. The 3.2.1 buy down, again, it's 3 points better the first year, then it's 2 points better the second year, it's 1 point better the third year. This is probably the one that is used the least amount of time because it's the one you have to get the most amount of seller pays on. So this one's probably used less than the others. This is kind of how it works. So again, if you look as far as year 1, 2, 3, and years 4 through 30, this is the 3.2.1. So you got a rate that's 3 points better the first year. You can see the payment from the borrower the first year is $497.49. So that's principal and interest. So the $698.53 would be the normal payment. So like the regular payment, once we get to the full terms of the loan, it would be $698. So you can see they're saving $201.04 the first year. The payment received by the lender is the $698.53 because that 201 is coming from the escrow account that the subsidy we set up with the seller pays that we got. That's basically how it works. I'm not going to go through the rest of this slide or rest of these slides because all they do in this slide, the way they did it, they basically break down each one the same way. So they'll tell you the 2.1, how it works. There's the payments on the 2.1 again. The 1.0, again, that's what the payments look like on the 1.0. The 1.0 is not bad. Most of the time, your cost price is like $2,500, $3,500 maybe. So if it's somebody that just wants a little bit better rate to get into the house, you could do it at 1.0. It doesn't cost your sellers a whole lot of money. They can get a better payment for the first year, and then they can look to refinance. So what happens under certain circumstances? Everybody worries about what happens to that money. Again, it basically pays down the balance in all of these situations. So foreclosure, it's paying down the balance. So the foreclosure amounts, a little bit less. If the loan's paid in full, same thing, it goes to pay down the balance. And if the property's sold, final amount due is lower because they add that to it at that point. So they're not losing this money. I have had builders and builders preferred lenders tell me they can't use this money when they refinance, which is absolutely 100% wrong. And I don't understand why the builders right now, every builder out there should be doing this program. But I've looked at numbers. I have a lot of people that will send me estimates. I've had builders paying 4 points, 3 points on deals to get the rate. The last one I saw, they were getting a rate like 6.25, paying 4 points. And it's like at 6.25, you're probably still going to refinance if rates dip into the 5s. So why pay, 4 points, which was like $12,000 to buy that rate down to that point, because they're probably still going to refinance. I want to show you a couple of real life circumstances. This is, I can send you guys this calculator. I got to share it again, right? I should see, that's complicated. That should just be easier. All right, you guys can see it now? All right, so this makes it really simple to figure out how much you need for the subsidy. So you look at the loan amount, all right? So let's say the loan amount's $400,000. Let's say we're using a 30-year amortization. We're going to do, I'll show you all three of them. So the 3.2.1, let's say the note rate is 7.25, meaning the full term interest rate 7.25. And then this shows you a breakdown here. So the total subsidy amount. So if you wanted to do a 3.2.1 buy down with a $400,000 loan, you would need $18,560, okay, from the seller. I've gotten it on a couple of deals, haven't gotten it on a lot. The most I've gotten on any deal was like 22,000, but we did a 3.2.1. They loved it. They got a whole lot better payment. Their starting rate, because we were in the 6s when we locked out one, their starting rate was in the 3s for the first year, which makes a lot of people happy when they see that payment. This section right here, you can kind of see what the differences are each year. So 321, the first year payment is lower by $760.95 because of the subsidy that we're doing. Second year, it's still 519. That's a pretty good savings. You know, it's really, really hard right now to have a payment under 2,000. You know, when you're talking 250,000 with taxes, insurance, and PMI, you're probably approaching $2,000 right now. That's first time home buyer. You know, a $250,000 purchase price is probably a lot of first time home buyers. It's hard for them to make that $2,000 payment. So if they have money, if they're putting 3% down, they won't let you do this with the 15K with the assistance programs. But there are some programs for first time home buyers where they can do USDA for 100% or do 3% down. This would be perfect for them because it gets them a lower payment starting out. This is a real life scenario here. Might have to share it. Can you see that one still? Or? So for this client right here, these people went under contract about 3 weeks ago, and they're in Las Vegas right now. They're relocating to North Carolina. So the property that they went under contract on, you can see we were at $395 purchase price, $5,000 in deposits, which was earnest money and due diligence, and then we got $10,000 in seller pays. And our original plan going in with this one was we want to do the buy down. They wanted to do the 2-1 buy down because they wanted a payment that was less than $2,800 for the first year. So you can see what it's done for them at $395. We got a loan amount of $381,175, a total loan amount of $387. This is an FHA loan, so they had the mortgage insurance that was added to it. So you have a base loan and a total loan. But you can see the rates went from 675 was our locked rate. We only paid a half a point for that rate because I don't like paying a lot of points when I'm doing the buy down. I'd rather not pay any points, but they wanted to pay a little bit because they didn't think they were going to refinance right out the gate. So 675 for the for the term, the duration, and they're 475 first year, 575 the second year. But you can see their payment was $2,576 for the first year, which was better than the $3,068. So these folks ended up, that was the plan going in. Now, unforeseen circumstances, we had a $395 contract that ended up appraising at $374,500. So $20,500 light on the appraisal, which hadn't happened a lot, but you know, it can. I looked at comps that the appraiser sent. The 3 comps were all in the same neighborhood. Were all sold from September on. And the furthest property from this house was 0.3 of a mile. So these are all like, you can probably see them down the street. Okay. The largest comp that was on there was 365 that had 4 bedrooms. We have 3 bedrooms and we're at 395. So I feel like the appraisal was legit. You know, I think it coming in 20 low, but probably it's still 10 higher than the most recent sale, which was a bigger house. So this is what we ended up punting to. We ended up, I talked to these guys, look, we're not getting the money for the subsidy. They asked, can I use my own money for the subsidy? All right, well, let's think about that. You can, but the subsidy is setting in an account that doesn't earn interest. So if you put your own money in there, yes, you can pull it out and still do the buy down. It's coming from you. But if you're going to do that, why not tier it and put it into a CD? So maybe you hold out your first 6 months and leave that as cash for you. The second 6 months you could take and put in a 6-month CD that maybe it earns 5% during that time. And then once you get past that, the next year you could put in a 12-month CD. So then you could start pulling that money out yourself to subsidize your own and earn interest. Okay. So I don't like them paying their own. The seller pays it. We're good with it. But this is what happened with this one. We dropped to 374.5 purchase price, 5,000 in deposits. And you can see our loan amount dropped obviously because of the short appraisal. They're going to we ended up buying the rate down. a little bit more and they wanted to go to 6.25, we actually are putting a little bit more down because they wanted their payment under 2,800. So we're going to do 5% down with them, which makes the PMI drop a little bit more. So their payment ended up being 2,750 without. But the reason I like to show this is if we can get those funds, then we can look at where are we in the market? Where are we with rates right now? Because the guy that I told you that I locked at 5.75, he got $14,000 in seller pays. Okay. When we went to lock was when we had come down for about 2 or 3 weeks straight. And we went to lock and we looked at the rate. I'm like, look, dude, I don't like paying 3.5 points, but you can get 5.75. 5.75 might be a rate you'll never refinance. I said, how long are you going to stay in this house? He said, probably 3 years. All right, definitely. Let's lock it at the 5.75. You're going to get the better payment. You don't have to worry about refinancing because if you refinance this, you're still going to have closing costs later. So if I can get a rate that I feel good about and the client feels good about by paying a few more points, then maybe that's the route you go with that client. Every situation's got to be different. It's got to be what's best for that situation for that client. There's no cookie cutter. This is the best rate, best deal for everybody. You have to look and you got to ask the questions. You know, somebody that's going to be in a house 1 or 2 years, there is no point in paying points because they're not going to be there long enough for it to make sense. So, and that's what if you can figure out ways to try to save people money, they're happy. Everybody's happy in the end. Everybody goes home with a smile on their face. So, does anybody got any questions about the buy down and how it works? I'll send you guys the subsidy form that will calculate it. It's simple. All you do at the top, put in the loan amount, put in the, are you doing a 3-2-1, a 2-1, or a 1-0? And then it'll pop out the numbers for you. I'll go back and show you just quick. So remember, we got 18,000 for the buy down. Probably can't see this one yet. So you got 18,000 if you're a 3-2-1 buy down. If you're a 2-1, it drops to 9,400. So that I like the 2-1. The 2-1, when people drop prices on homes, they're not dropping them $100. They're dropping them 5 to 10,000 usually is what you see on Zillow. And if they're going to drop it $10,000, let's throw out first, hey, look, we'll give you $10,000. Here's what you can do with your payment. This is how it's going to help you as the buyer. And, it will make a difference. You will get more deals as a result. And then the 1-0, you can see it's $3,100 for them to get a little bit better payment. The difference in the payment's $265 a month. I mean, that might be the difference that makes somebody say, yeah, I'll do that. So I want to show you too. I like to show this because let's get to it. I want to price one out just so you can see where rates are right now. So let's say we got a $300,000 loan amount. Let's do a 325 purchase. I'm going to show you what no buy down looks like right now on the rate with a 740 credit score. Best rates are 780 and higher right now. They were 760 and they adjusted it. So now the best rate's at 780. You can still see that, right? So if you're looking at a pricing sheet, a lender has to have par pricing as 100. So when we go to buy the rate, we have to be at 100 basis points. So if you look at this row right here where it says final lock price, 100 is where every lender has to be when they go to lock the rate. So you can see that's 7.625. Okay. Me, the way I would look at this, I would say, well, I know I can go to 7.49 because that's only paying 0.050 points. It's not a lot. You're paying $150, but you get a smidge better rate. Then I try to look at a lot of days, the pricing's kind of mixed up. If this were to work the way it's supposed to normally work, this price would go up all the way down. Every one of these would get higher as you went down. But you can see there are some of them, we go from 97.9 to 98.3. So we're only paying 1.7 points there. But then to get to 6.75, we're paying 98.1. We're paying 1.9. It doesn't make sense to pay more points to get a worse rate. So every lender right now has to make sure they're paying attention to their rate sheet, because you have points like right there that you would actually pay more points to get a higher rate, which makes absolutely no sense. So when you're talking to your lenders, hey, let's make sure we're looking at the whole rate sheet, not just, you know, a couple of rates right there. So if we're looking at on the 2-1 buy down, you're getting a rate that's 2 points better the first year. 2 points better, let's use 7.49. 2 points better is 5.49. That's not even on the rate sheet. You know, to get them to 5.75, we're having to charge them 4.738 points. So when you look at the buy down, what does it do? It gets you a better rate that you can't even get on a rate sheet right now when you're doing a 2-1. So to me, that's worth pointing out and showing them, hey, look, this is going to make a big difference on your payment, you know, by using this program here. Doesn't cost them any extra money. There's no extra training or, you know, coursework, anything they got to do to use it. We just have to get the funds from the seller. And a lot of sellers are paying closing costs right now. As we move into the year and rates get better, you know, that's going to transition. Sellers are not going to give up as much when there's more activity, you know, more multiple offers, that kind of stuff. So it's definitely a way to help you get buyers in the door right now. You know, every agent out there is saying buy now while sellers are still working with you. And I'd take it a step further. First time home buyers right now, the 15K rate dropped to 6.75 the other day. Again, we can't use the buy down with them, but that's a pretty good rate. They're getting help. There's a lot of houses in the price range that first time home buyers can hopefully afford right now. 225 to probably 3.25 is out there. Davidson County, I can't believe how many houses are in Davidson, like Thomasville, Lexington, High Point, that are decent price points. You know, the further you get here, we're paying more, but there's opportunity out there for everybody, really. So, does anybody got any questions on it? Yes. The servicer on the loan. Yep. Yep. Because all they're doing is when that person makes the payment, the rest of it's coming straight from the escrow account. It just seller pays, because that's all it is. We're just getting the seller page that we need to set up that account. Mm-hmm. That's the number then we put on seller page closing costs. And then you itemize or define that. You don't have to. We do that on our end. You don't have to, because it's a seller concession that you're getting, and it's just what we're doing with that concession to be able to do this. Nah, that's the easy part. If you can negotiate, and you know, usually I'll tell them, hey, we need 8,300, but if you can get 10, that's 1,700 more that they can use to help pay some of the other costs for them. So you're still going to be bound by the limits. So like, you know, if you're conventional loan 5% down, you can only get 3% concessions. So you got to watch that number too. Yeah. I like the buy down as an FHA loan because it's 6% concessions with FHA. The only reason I don't like the buy down, and it's kind of a give and take, you're paying the upfront mortgage insurance, and you'll get some of that back. But when you look at what's the difference in the rate and the payment on the FHA and the conventional, I'll put them one on top of the other, compare. Because if you got a buyer right now that's 700, 720, 730 credit score, and they're only putting 3% down, you're better off going FHA. That's still a good credit score. It's great credit, but the PMI at 30, when you're 3% down, your PMI is 35% coverage, and it's sky high. So even like a 720 credit score would have higher PMI than an FHA loan, same credit. So put them on top of each other. Hey, your rate's better by half a point. The PMI is cheaper. FHA is the better deal, even though you're probably a conventional borrower at a 720 or 730 credit score. So when you look at the percentages, there's standards. Like if you put 5% down, you're 30% coverage. If you put 10% down, you're 25% coverage. But that doesn't tell you what the premium factor is. So there's not really, because as credit goes up, the PMI gets cheaper. And there's like 5 or 6 different companies that have different niches for what they do. So the easiest thing to do is FHA is 0.55%. I would use something close to that unless it's a lot lower credit score. If they're 680 trying to use a conventional loan, they're going to be high on the PMI. It's probably going to be like 1.25. It's going to be high. Yep. And I can run, like, if you got people, I can pull stuff up like that from my phone. So if you're out and you want just know a payment, like a lot of times people will be looking at a house, man, I wonder what the payment on this. Just call me. I can run numbers like with you on the phone and say, hey, here's what a payment would be. If you know somebody's going to be interested in looking at the buy down, get them to, I can send you this spreadsheet that shows a breakdown of everything. And this makes it so easy for them when they go look at the house. They can tell right there, like I put the buy down subsidy here, so it tells you what you needed. And this is what they got for closing. This is what we asked for. And it shows a final breakdown here on what their cash at closing was and their payment. So I'll send this to even listing agents, because sellers want to know, if I do this, instead of dropping the price on my house, how much do I have to give the buyer to be able to offer this? Right there. You can give them $10,000. We can pay $88.92 for them, and they get a payment that's $500 better the first year. I would do that before I drop, but I also would not be afraid to go back and increase the price. If you've dropped the price a time or two, it's still probably going to appraise. You guys do your homework. I mean, that the value's there. You're listing it probably at that. And if you drop the price, we can go back and add it back to do this. So I don't know that there's a right or wrong time on when. It's just something to offer. And if the right person likes it and it helps you sell it, that's what we want. It's not a bad program. People ask, what's the gimmick? Well, you see, I mean, the rate's going to go up each year that you stay in the house. You're likely going to refinance, which is the hope. Be comfortable. If you don't refinance, look at that top end payment. This is what it's going to be in 1, 2, or 3 years. Are you good there?
They get this money to hold and
To me, the no-brainer part of it is you get a better payment out the gate, and you use the money later if you refinance. So it's a win-win there to me. So I think I'm coming back. I'm coming back next week, right? On the 1st. All right. So one thing I want y'all to do for me, if you have any creative financing questions you want, shoot them to me this week, so I can put together, because I can get as creative as you want me to. I can't really tell you all my secrets, but there are ways around, a lot of things. And that's what it's about, figuring out what's the best way to make something happen for people. Well, Thank you, guys. I think you got somebody coming on right after this.
Yeah. Connor's here and he's gonna.
All right, I'm gonna hand it back to Melissa. Sharon.
And then probably mute, so I can unmute. Give me just a second, I can see what I'm doing.
We'll be the closing call. I know, yeah, I know. And y'all are doing the buy downs, right? Yeah. 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 I mean, it's. Right. It don't make sense. That's right. Hey, if True is doing the buy down, take your comments that way. You know, it's a great program. They built a great house. Didn't sound good. I leaned back. I'm afraid to lean back and find out again.
All right, you have an open mic now.
As well.
Yes, we have a few people on there.
Okay.
I am tethered, I will tell you, because I no idea how to do that wireless.
Hi, Melissa. Oh,
Hey,
nice
thank
to
you.
finally meet you. Wonderful.
Well, they don't need to see you because it's right there.
Perfect. I'm gonna stand. Thank you guys for having me here. Sandwiches in the back, help yourself later. Just wanted to swing by. I've been excited to get in here for a few reasons. One, this is like my favorite part of this job. I love doing the connecting and making friends. I learned it's a lot easier to work with people that are your friends instead of just looking at you guys like, oh, real estate agents, that's it. But yeah, I like to kind of take it that step further, and we like to have fun. I am very well aware of the fact that I cannot do my job without you guys. 85% of my partner Candace and I, our sales last year came from brokers. So this is huge. We spend multiple days a week out in the field getting to know you guys, trying to create those relationships, help your buyers. And yeah, that is kind of my intro. First off, who in here, anybody has sold a true home before? Okay, perfect. Good. This is wonderful. So at a glimpse, True Homes, this is who we are. So we're the largest private builder in North and South Carolina. We are only in those two states. We are comfortable, privately owned. We like to stay where we are. Our owners actually live right here in Charlotte. We've got like 500 employees. It's a small business. We close right around 2,000 homes per year. That is our niche. That's our comfort area. We've won plenty of awards. I won't bore you with that. Where we are, this is where we are. I can help your clients in any of these neighborhoods. These are our Charlotte North communities. These are the main two I'm going to touch on in a little bit. They are brand new. That's why I'm excited to be here and show you guys about that. I first started up here in Hidden Lakes, up 77 off of exit 45. I was there for about 6 months, spent a year and a half in Albemarle, and so now I am going right in the middle. So I've moved to the Kannapolis location, been here since November. So very excited to be in this area of town. We've got these two communities, and then we have a 600 home community coming in China Grove. So I will be here around seeing you guys for like the next 3 years. So I hope you get used to seeing my face. So
Where's China Grove going, up the shoe road?
oops, it will be literally right here, like 10 minutes north of here.
All right.
So yeah, I'll get you exact locations here soon, but those probably going to be released for sales like December of this year. So we'll close out of these two communities, and then we're going to transition right into that. Semi-custom. So here is the deal. So we have inventory options where we have move-in ready homes. If you guys said, hey, I need a home in Concord that's ready to go, I've got two in our Haven and Rocky River community. I've got ones like sprinkled in, 1 out of every 15 will build as like an inventory home, or in the case that somebody cancels their contract, we will then ultimately resell that one as an inventory home. What we're known for is our build. So this is what clients love. This is what our brokers like to do. Is if you've got clients that have been looking for a year or two, haven't been able to find something they love, give us a shot. This is where we come in and say, hey, we are a semi-custom builder. You get to actually, like in Elizabeth Oaks, it's a 32 home site neighborhood. You tell me which lot you want. You tell me which floor plan you want, from 1,600 square feet to 3,900. You pick your price, where you're going to be. They're all different prices. Then you say, okay, we want a luxury bathroom in our owner suite. We want a bathtub and a shower combination. You pick all of that. Do you want brick or stone in the front of your house? You pick your colors, all of that. That is with me. Then you go to our design studio. We have a 6,000 square foot design studio in Monroe, North Carolina. That's where your clients get to go. They get to pick all of their flooring, cabinet colors, the hardware, everything that goes into the home. So that is where it's great for that affordable price to be able to have all of those selections, and the clients love it, that whole customization process. You have one of these in front of you. This is our Concord Lakes townhome. So this is 5 minutes east of here. This is exactly where I just came from. This is our brand new community. So we will have 40 resale townhomes, have already sold 2. We just launched in January. So pretty pumped about that. We're having our grand opening on the 31st. We're on the board of the Commerce or the Chamber of Commerce in Kannapolis. We're doing a ribbon cutting out there that morning. So we'll have like 200 brokers out there giving away prizes. We'll have food trucks, all the good stuff. So yeah, that will be awesome. And then, those are both my Concord. This is just showing this is our price range for these, like $350, so $349 for the interior, $359 for the exterior units. This will be a quick project. Very excited about it. These are the ones where all of the communities I have been in have been the to-be build, where you're looking at like a 7-month process. These ones, if you've got a client that needs a townhome to close in February, I've got 5 of them. So we've got February, we've got May coming up, and then we'll go all the way until we have all 40 of our homes sold. So that's right across from the Kannapolis Fire Department, if you know where that is, right next to Lowe's. So that's where I'll be this afternoon. Yeah, very excited about that. The other end, this is Elizabeth Oaks. So this is right up Moose Road. So this is where we started here. We launched in November. We've sold 5, ranging from 380. This, for my last presentation, this was 500. I had a client build a Wakefield, which was 3,500 square foot owner suite down home that they put $100,000 in upgrades, and it's at 616 is their total price. They've got money, they're fine. But yeah, they're huge homes, so we can build from 16 to 4,000 square feet. But this is kind of what it looks like. We're gonna say, okay, I want lot 18, and I have the full price sheet and all of our 15 floor plans, and then there's so many. You like, if you say you pick the Hudson, that's kind of True Home's baby. There's 7 different Hudsons where we have like we can do a bedroom on the first floor, we can swap out a study, make it a bedroom, we can make it a sunroom, that little mix and match where you guys get to ultimately pick what you want. So that is Elizabeth Oaks. That is our new community. So 2 right in your guys' backyard. So this is awesome to get back in here. Are you familiar with the Falls? With the Falls that closed about a year ago, I sold the last one in there. That was a great neighborhood to finish out, and so now we're starting again, and Kannapolis is blowing up. Like, that's why I'm so excited to be here. We just drove through, got a tour of the Eli Lilly facilities that's coming. Red Bull's coming here. People are coming here, and as you see, they're spending some pretty good money to come here. So I, especially having a baby on the way, I'm excited about the feel like I have some job security being out here with everything that's coming. So True Party, I told you we like to have fun. This is, if you get 1 sale with me a year, you are invited to our True Party. We gave away over $350,000 last year at our party. It's pretty sweet. This is kind of just our thank you, where our corporate, their corporate is there. Not a single person left with less than $700 in cash. They're giving away like Gucci bags left and right. Go out, play games, have fun. It's for an hour, and we gave away 350 grand. It's pretty sweet. So yeah, that is something that we're excited about. It's coming up in May. So there's still time, but yeah, this is one of my favorite parts is the having fun as like a thank you to you guys for everything that you do for us. So let's partner. This is my partner Candace. So she's in this one. This is my business partner Candace. So she is wonderful. This is just some of the photos of clients. Like, this is, for example, these are the builds where they're out there on the dirt. That's what it looks like when they buy it. And then this is what it looks like when they close. So this is like the inventory home where she was like, I need something that's going to be done in a month. There you go. We luckily had something that was ready for her. It's good to have options for all different clients. Everybody has different timelines. So I love this job. We're going to be here for a long time. This is the first job that I've ever had where I feel like I'm not working. I feel like I love what I'm doing, and I'm actually helping people, bringing value to their life. My wife and I live in a True Home. We love it. We did the inventory route. We're going to be building next. And then last thing is, I'm really glad that you are here. We have very, very good incentives right now in a lot of our communities. The most money we have is in our Concord Lakes and Kannapolis communities. Like, for example, if you went to Oakboro, I can give you $5 grand. Can't do too much with $5 grand. For our first 4 buyers in Elizabeth Oaks this month, $25,000. So that's where I'm saying, hey, you got a buyer, let me cover your closing costs. I'll completely cover your closing costs. And then we'll use whatever's left to do a 2-1 buy down. But you could do a 3-2-1 buy down with 25 grand. Yeah, Concord Lakes townhomes, we've got 15 grand to give away for the first 4. So that all switches. It has gone down a little bit in the last month just because with the market shifting, we sold so many homes in December. October, November was a little rough with interest rates. That's when, we use the incentives when we need them. And so, yeah, for here, we've got 25 grand in Elizabeth Oaks, 15 in the townhomes. And those are for the clients to use however they want. So for example, if you had a build on Elizabeth Oaks, you can use it towards design studio. I can give you $5,000 towards design studio, $10,000 towards closing costs, $10,000 towards buying your interest rate down. I say here, it's called seller paid closing costs on the contract. Use it however you want it, whether it's buying the rate down, closing costs, whatever that may be. Yeah, I love my job. I'm glad that you guys are here. I look forward to getting to know you guys. I am quite literally going to be 5 minutes away. Elizabeth Oaks, there's nothing there yet except a trailer and a bunch of empty lots. So that's part of we're not building a model there just because it's only 32 homes. The Concord Lakes, the model is done as of last week. Thank God I'm out of the trailer now. So It's good. That's where we are. I would love to see you guys on the 31st. We got a big event, grand opening, so that'll be awesome. But yeah, I'm just here to help. I know you guys have buyers and sellers, and I just want to be an extra option to help you guys out. So that's what I'm here for. So
Where's
thank
the
you.
location at Elizabeth Oaks again?
1401 Moose Road.
Can you turn out the light by the Dollar General off Wayne Street? Is that the easiest way to tell people to get there, or?
It's right next, so it's like, I turn on like 13th Street and go right down, and that's Moose Road, and I just turn left. I'm still trying to figure out my,
From Lane Street.
I'm like the generation where I type it in and I just turn where they tell me to go. But that sounds right. It's like a Cannon Pharmacy is right there on the corner. So we're right behind
take
that,
that
next to the church, yeah.
You could-
Mhm.
I was trying to think off Lane Street,
Yeah.
most direct way, but yeah,
Yeah, absolutely.
more one way.
Any questions for me so far? And I'll be at the model all afternoon in Concord Lakes if you guys want to swing by. You have my card. We're fairly busy. We love to set up our weekends. I like to do stuff like this during the week. I'm off Thursdays and Fridays and then every other weekend, but my partner Candace or I will always be there. Just shoot me a text. Would love to get together with you guys, do lunch, talk about the market, whatever you guys want to do, meet up, bring your buyers out, whatever we can do. So any other questions before I get out of here? And please eat. I am going to take one of those because I'm sorry.
So one of my agents in Charlotte is friends with some true agents.
Yeah.
And he will go to those sites down there and do open houses.
Yeah.
On the days when he doesn't have anything else
Exactly.
going on. Is that something like?
If you guys want to host an open house this weekend at one of my locations, do it. Market it. I love to do that with our brokers. They'll do that a lot with homes that are either complete. I don't like to get them to complete. I want to sell them while they're in framing. But being here in Concord, we have 5 now that are going to be done in February. They're not quite complete. Like the cabinets are all in. Flooring just got put in this week. But yeah, absolutely. If you guys want to come to sit in the model, sit in one of the inventory homes, you guys can market it. I will always, please connect with me on Facebook. I will share it. I would love that. That would
He
be
does
great
it
for
because
me.
he believes that he has a lot more clients that come in that are not, that don't have an agent.
Mhm.
Because they can just walk in and check everything out. So
Yeah.
it may be an opportunity to sit for 2 hours, pick up 3.
Yeah.
things.
That was a huge thing for me. I'm glad you said that. I never got any foot traffic in Albemarle. Nobody's driving all the way out there an hour. So that was something I never worried about. I never did open houses or anything. It was all broker generated traffic. Here, I had 6 appointments on Saturday last week, and I had 2 walk-ins where I had to say, hey guys, I'm meeting with them literally Saturday. Where I'm saying, hey guys, I'm sorry, I don't have any time for you right now, which is awesome. So yeah, this, especially being in this area, there's a lot more foot traffic of kind of juggling the schedule. But yeah, come hang out, sit in the model for an hour or 2. I'll get lunch. And then anybody that walks in, that's where I say, hey, here's a real estate agent. Great. It doesn't change me. I get paid the same amount of money. I'm not paying you guys. So I would love to help you guys out. So we do that pretty often.
Sets you apart if I was working with a buyer client and heard of this builder or that builder and I don't know if to name names or not, but what sets you guys through homes apart from other regional or?
Nobody else does this. No,
Semi-custom.
nobody has those options. Like I'm very familiar. I'm great friends with like Leanna who works at Meritage. There's our, hey, walk in, here's our options. There are some with DR Horton where they'll take you in their like study and they'll say, here, pick your flooring options. They'll give you like 4 or 5 options. Great builders, national builders. But we're different. And then the thing that honestly means the most to me owning a true home is, and I can just we don't sell to investors. That is not what we do. We don't do that. You can, in our contract, it says, no, you're not an investor. Live in the home after a year, like you can rent it, do whatever you want after that. But I know Meritage sells to investors like a pretty decent amount and then they'll cut prices at the end of the year and they'll say, hey, this is a great, December red tag sales event. In my 3 years, our prices have not come down one time. Our prices go up the 1st and the 15th of the month. That is how we protect our homeowners who they're making an investment. So if I slash prices $20,000, there goes all of their equity, like those comps that you're talking about. So that is where I love it because I own my home. We closed a year ago in February and I'm thrilled with what I'm seeing in the prices now. So that is something where we are, like I said, we closed 2,000 homes. We cannot afford to just slash prices just to get sales because our integrity and our broker relationships and our clients, they're seeing kind of the big picture. We have that friends and family philosophy, like I was talking about, where we cannot afford to do that. Yeah, so that is where our prices will continually go up. That's right. And once you write a contract, so if you brought me a client and they wrote a contract today and the prices go up $3,000 tomorrow, you're locked in at that contract price. So every time that we build a home, our clients are closing with $20,000 in equity by the time that the day that they move in. They could stick a for sale sign in there. We've had that actually where a woman got another job and she was like, I want to cancel my contract. I was like, turn around and sell the home. You've got $35,000 in equity. And she did it and she was thrilled. So yeah.
Might have given them 25,000.
And we're giving, yeah, and that's different situations where I'm not stingy about, the money because I like to help people. Like I got money with my wife and I when we bought our home. And it helps. It's because the most important part is the payment. And so that's where I was like, I don't care how much you love the home. Let's sit down and spend some time and figure out what makes the most sense for you, doing the buy down. Whatever that may be, kind of taking that extra time with clients. Because it's a huge deal, like buying a home. Like this is not just not buying clothes or buying a bag or anything. No offense about buying bags. I don't know anything about that. But yeah, that's what we always say is especially, because our competition is the national builders. And we say, you don't buy your bags on sale. Like we don't buy your home on sale. Don't sacrifice price for quality. Like look at the awards that we've won from Pro Builder and all of our surveys. Like I have selfish brag, but I've never got anything less than a 100% survey in my 3 years that I've been here. I take it deadly seriously, especially since I've gone through it and I know how big of a deal it is. And yeah, like I follow up, you brought me a client, I will call them every single week with my builder and I'll go out there and I send them photos. And I said, that's what I'm doing tomorrow with my builder, Greg. And we'll say, hey, here, we got your siding's up now, and just send them an update. So you guys will hear from me every single week with your clients, because it's an exciting thing. And we like to be a part of that process. And because a lot of people are out of state as well. So doing that for their comfort, letting them know what's going on in their home.
What's your builder's last name?
Darvitt, Greg Darvitt.
Complaint I hear from buyers is on certain neighborhoods, the lots are just so small and the
Sure.
houses are so many. On this Elizabeth Oaks size lots were.
So the ones that I sold, there was one that was a 1/4 acre and then one was 0.18, but like 0.2 is probably right around there. That's typically the norm. But if that's it, I mean, that's what I can't change that, obviously.
Sure.
But that's where, yeah, if you want the bigger lot, let's go pick the bigger lot. I have 28 lots left in Kannapolis where there are some larger options. But then you could go to Stanfield and Oakboro, and we've got anywhere from 3/4 of an acre to 2 acre lots out there. Same thing, we just got a brand new one in Troutman, exit 42, called Wheatfield, where the minimum is a 1/2 acre lot. I sold 2 there in December. So that's a big deal, is a lot of people want land. A big thing for us is first time home buyers. Like that's my passionate side of it, where people are renting in their own apartments and they quite literally have no land, and they'll be thrilled with a townhome community where they can have just a little bit of something to call their own. And it's 2-3 year investment where they'll be there and then they can go get their 1/2 acre land. But yeah, absolutely, that's a battle that we deal with all the time. It's just the new construction neighborhoods, and it's like, great, why haven't you bought yet? If you haven't found what you're looking for, customize the home, build it the exact same way that you want. Pick quite literally everything that goes into the home. Yeah, and if there's going to be trade-offs and everything, but if that's an importance, I'll say, great, let's go look at some of the larger lots or some other communities where we can offer those 3/4 acre lots.
What's the name of the Troutman?
Troutman is Wheatfield Estates. And thank you guys for having me. I appreciate it very much. It's just here to help, that's all. And feed you.
Yeah.
There you go.
mean, you asked the question, like, what, you know, what would you point out for them? I kind of feel like just being local. Like you said, corporate's in Charlotte. I mean, what LGI is out of Texas, you know, different, but
Yeah,
they have a reason to want to build a good product here because they are here.
yeah.
So, and raising the price, I think, is typical with
Mhm.
new construction, but it also, it's a benefit to, you know, to your buyer because they don't have to worry about losing equity. That's always the fear, you know. 15 years ago when there were foreclosures and stuff, like, you know, Kellswater
Yeah.
had some lower quality builders come in and, you know, make people mad, so. But homes are gonna appreciate to have, what, 77 times out of the last 82 years or something. So,
Especially in Charlotte. I mean, we live in Charlotte.
yeah.
We just had our end of the year. There's an average of 113 people moving here every day. We're not,
I hear that fluctuate, which,
it was 113. That was at my meeting, the first of the year, our market meeting. And that's where we're not building that many homes. So
Yeah.
when you look at the supply and demand, the prices are gonna
Yeah.
continue to go up.
I think about that a lot when people are like, there's no deals out there. We are a large company, Fairway. We have a lot of loan officers in the Charlotte market and we only have 2% of the market share, which is unbelievable. Because I know what we do. And to think that we're only 2%, that there's a heck of a lot more deals out there that I get.
I appreciate you coming
Yeah.
in.
I know this is.
I'll be back. I'll have plenty more for you. But yeah, please save my number, shoot me a text. I send out our weekly inventory lists every Monday. For all of our inventory homes, even the ones in like South Carolina as well. Just to give you guys an idea of what we have for any clients that you might have, like move-in ready that doesn't want to build. But they would love a new construction. Our warranty programs are great. There's 1, 2, 10-year warranties on everything. So yeah, if you guys shoot me a text, email, whatever works best, I'll get you guys added to that as well. And also, if you guys ever want to have a meeting like at the model home, just to get out of here, go check out a community. We love to do that as well. We do that all the time. So
They'll cater it very well.
Yeah.
and yeah, I'll feed you.
Oh, yeah.
I like to eat. That's it. So awesome. Well, thank you guys very much. Appreciate your time. Thank you.
Connor, I appreciate it.
Absolutely. Thank you.
You're welcome.
If y'all know of deals that are falling out for whatever reason, call us.
All right, y'all, thank you for hanging around and listening to Connor.
Here, somebody fell out of contract because.
Have a good day.
Call us and let's look at it. I mean, we're good at fixing stuff. If they looked at it initially and gave a pre-qual, there was enough there that they thought they could get a deal. So what screwed the deal up? What came into the mix that we gotta fix? And there's ways to fix a lot of stuff.
What does mess up or what goes wrong
I mean, it could be a lot of
for
different things.
prevention, so we know.